Most of the people that are in crypto right now, they are looking for a lottery ticket. They are looking for speculation. They are looking for a 10x. They are not looking to make 10%, 15%, 20% a year. A few years from now, no user is going to know which chain the application runs on. The user doesn't care. The user just wants to make money. The user wants to have an investment portfolio. The user wants to create wealth and compound wealth. How that happens under the hood is irrelevant. The main problem, I think, this cycle is like we have not brought almost any new net users, and that's why everyone is suffering. Oh, Bitcoin is going to replace the dollar. I mean, that may happen, but that will take a long time. Probably it will never happen. But what is much more likely to happen is like...
What is your greatest ambition with Kinto?
For Kinto, I mean, the North Star is pretty clear that...
I've been working with the Token.com team for almost a year now, and I want to share their new product with you all. If you've traded or own any Token.com token, please fill out the form in the description below for a chance to win up to $500. I'll pick 5 lucky winners. Join the Token community on Telegram, follow them on Twitter, Instagram, and TikTok, and subscribe on YouTube to join in more competitions to win and earn Token. Excellent. We're here today with Ramon of Kinto. Super exciting conversation and a project that I think fits into a lot of narratives around which we're seeing the industry move in. So I'm really looking forward to this conversation. Ramon, we'll start off. Kinto's Kinto's catchphrase that you have on your kind of branding is the modular exchange. What does that mean?
Thank you, Jack. It's great to be here. Yeah, the modular exchange, the name comes a bit also from all the modular thesis that Celestia started. Basically, we have been right now like 10 years in crypto or so, and it's crazy that still for most people, the way they get into crypto, it has to be through a centralized exchange. And a centralized exchange, in reality, is not crypto. It's a Web2 company. They have databases, they store all the user information. They may use crypto just to transfer things, but they operate like a traditional SaaS company or a normal web company. So I think like the holy grail of crypto is being able to offer users a possibility to have full control of their funds, like meaning your keys, your coins, and they can always withdraw at any time they want. But at the same time, being able to offer users all the features that they like from centralized exchanges, like Fiat on-ramps, like full account recovery, so my grandma can use the platform safely without worrying that she's going to lose all their money that she puts in. And then other things like also being able to support many different assets, many different chains, and all with a UI UX that is really easy. And on Kinto, we have also everything is gasless, so the users can use it like if it was any normal web application or mobile application.
Right. It's interesting, and I think we're starting to hear the rumblings of a thesis around these types of platforms. We just talked to Andre Cronje, who has announced his similar desire that like we need to have a sex-like experience on chain, and then his kind of DeFi super app that he's been kind of hinting, and then even more famously we have Hyperliquid, right, which is kind of seen as a competitor product to things like Binance or Bybit, and not like a decentralized perp dex necessarily, right? And I think that's why it's commanded such kind of attention and high valuation as well. So where do you guys fit in this spectrum? Like how broadly across the stack do you go? And how do you guys think about kind of product broadly?
That's a really good insight, and I think it's the key of what's happening. This DeFi super app that many other people are trying to build, similar Infinex has a similar thesis as well.
Right.
I think it comes from the realization that in the end, what matters is like who has the end user, and wallets or exchanges in the end is where the end user is, and you're going to be able to monetize it much better than if you are at the infra level. So another reason why we call ourselves the modular exchange is because we have all these modules or all these product lines to be able to offer this experience like centralized exchanges. For example, we have a chain abstraction layer that we built with Socket to be able to offer users the ability to use mainnet, Hyperliquid, Arbitrum, Base, etc. Then we have this account abstraction. We built our own wallet that is smart contract based, similar to and also safe. So it's like hyper secure, but still we build some modules like social login. Also, we work with turnkey as well to make it as simple as possible, so the user can use their fingerprint via passkeys. Then we also have this KYC that is built in the most decentralized or permissionless way possible, which is something that is kind of like a paradox for most people. It's like, okay, how can you be permissionless and still be KYC? But we are able to offer much more privacy than centralized exchange and still being able to be community owned. And we have all these features because basically, as you say, for retail, in the end, they just care about the experience. And from the regulation side, governments and financial institutions still require, unfortunately, KYC and AML. We have KYC not because we want to. I mean, having KYC gives you really nice properties. Like, for example, in our chain, in our user, our wallets, all of our users are verified because they go through the KYC. So we have civil resistance by default. We don't have problems with bots. That gives you also nice features to offer other features, like, for example, the launchpad that we released last month, and we ran our own ICO, and it was made that every user is unique, and then there are no problems like gas wars and things like that. But it all goes back to being able to create kind of like a robot that mimics all the features of centralized exchanges, but grabbing like the best decentralized protocols and the best pieces of decentralized stake to being able to offer all that functionality, but still with the main focus of the users are always in control of their funds. So things like the Bybit hack cannot happen because also all the funds are split between all the user accounts. So there is no central honeypot where the hackers can attack. It's all 80,000 different user accounts.
Right. So, I think people have been talking about DEX is obviously, but also this concept of the DeFi super app for probably 10 years at this point. However, the vast majority of people still interact with crypto via a centralized exchange. Why is this? And why do you think that now is the time that the paradigm changes?
Yeah, I mean, until 1 year or 2 years ago, it couldn't be done. It's just too painful. Unlocks like account abstraction, for example, so you can pay gas on behalf of the users, and then you have the smart contract wallet. They are like prerequisites to be able to make this work. Then at the same time, all the transactions, all the scalability, if you are able, because for example, our wallet is on-chain based, so you need to be able to have transactions and cheap transactions in order to make this happen. And now transactions are a lot cheaper than they were in the previous cycle when Ethereum, even mainnet, you can see that. I remember I when I was building my previous project, Babylon Finance, I used to pay like $2,000, $3,000 to deploy a contract, and right now it's like dollars. It's like if it was an L2. It has a scale by default, by no use.
Yeah. The other night, I tried to I just had to send tokens between wallets, and it was 0.00. It didn't even show up. Like the gas fee didn't even show up in Ethereum.
The other angle that is really interesting here is for institutions. It's no coincidence that all the exchanges have like a product line for retail and a product line for institutions, and it's the same for us. And basically, institutions and governments have not been able to use DeFi because of their counterparty requirements. Basically, right. The compliance guy on every of these institutions is so afraid because to interact with this lending pool on Aave, because they don't know who else is touching that pool, and then they don't want to deal with the potential repercussions like touching some OFAC funds or some tainted ETH that has been through Tornado Cash, etc., etc. But given that Kinto, we also have our own layer 2 and we have our wallet and stuff, we can act as a buffer where the institutions can access whatever they want on DeFi through us, and then we do all the work of making sure that whatever we interact with is clean, and then whenever they deposit and whenever they withdraw, so we are able to make sure that that all the transactions, all the funds are clean using services like Crystal, chain analysis, and then because our institutions only interact with Kinto, and in Kinto absolutely every user is KYC'd, then we can basically meet those requirements.
Okay. Are there any things that you guys are not able to do that a centralized exchange can provide?
At the moment, I mean, the easiest answer there is like they're able to support a lot more assets, a lot more chains. Right now, we only support EVM networks. Right now, we support Hyperliquid, Base, Mainnet, and Arbitrum. But in the next few months, we plan to add support for non-EVM networks like Solana, Ripple, Litecoin, even the Dino coins that people still use centralized exchanges for. That's something that we need to add support for. And then it's just product line. For example, if you check Binance, they have like 20 different products, from perpetuals, from trading, lending, borrowing, the launchpad, all the trading services that they offer. And for someone to compete, to be able to offer feature parity, it may feel like it's easy, but it's like they have so many features. But long term, I believe that exchanges in the end, there is no way that, for example, every exchange like Coinbase, Binance, Gate, OKX is going to be able to build the best perpetual system. I think it's much more likely that someone that focuses on that, like Hyperliquid or DYDX, is going to be able to offer the best experience. And then in Kinto, we integrate Hyperliquid for perpetuals because we think those are the best for that purpose. So I think over the long term, being able to integrate and create this DeFi super app from the best pockets of DeFi, for example, Coinbase, for staking, they just integrate with Lido and they charge you a fee on top, which makes no sense. And now for lending and borrowing, they just use Morpho. So even them, they have given up of trying to compete and build or they just build a wrapper on top of the DeFi. And those wrappers are relatively easy to build. The main advantage of something like Kinto or something like Infinex, if you are able to meet and offer all the same features, the main difference is like Coinbase, Binance, Kraken, all these companies are really heavy in the sense that they have tens of thousands of employees. They need a license to operate in every country because they hold users' funds. While us, we don't hold users' funds. The users are always in control of their funds, so we can run much leaner and we can support a lot more users with much less employees.
So you guys have kind of a unique advantage over a centralized exchange. Are you guys building, you mentioned like Dino coin support, and I think really that there's kind of been two groups, and we call them kind of like on-chain natives, DeFi natives, and then we have like the other people that are primarily interacting with crypto via centralized exchange, which in some cases they still are crypto natives or they're big perp traders, something like that. Who are you building for?
Yeah, right now the way we are splitting it is on the retail side. We are focused on users that are not crypto degens, but are users that have used Coinbase, for example, but have never touched anything on chain before. They have never used lending and borrowing. They have never used perpetuals. And we're focusing on onboarding those people on chain. Of course, we're competing with Base. That is relatively complicated there, but there is enough space that I think if we bring 10, 100 million, a billion users here, everyone is gonna have an opportunity to acquire some of those users. On the traditional market, on asset management, there are like 50 to 100 companies and mobile apps that are worth between 500 million and 1 billion. There is no way that in crypto it's going to be just exchanges. You're going to have also the Robinhoods, you're going to have new companies. The main problem I think this cycle is like we have not brought almost any new net users. And that's why everyone is suffering, because I've said the Trump coin, and that was really short-lived. I think the rest of the cycle is just PvP, and they're just fighting to steal each other users, but we have not onboarded many new users this cycle. So to complete the question, on the retail side, we're focusing on that. On the institutional side, we're focusing on hedge funds and traditional financial institutions that are looking to get into crypto, and they want to use DeFi, but they haven't been able to do so yet. We did an announcement a few weeks ago that Brevin Howard, they are using DeFi now through us, and that was the first time that they are actually doing that.
Oh wow, very interesting. I remember previously we talked about, or not us, but like as an industry, we were talking about the idea of like exchanges integrating with decentralized products, and I remember there was a tweet that went viral that was talking about how like Binance should just become a Hyperliquid wrapper and use KYC and use the actual Hyperliquid product. You guys face decentralized competition. You also face centralized competition, but is there a possibility that the centralized competitors, once they see that there's kind of like a legitimate value prop to to holding customer funds in abstracted accounts on chain, that they're just going to create the decentralized products themselves, and that they have kind of more resources and they already have the user base and will be kind of formidable competitors in that sense?
Yeah, I mean, whoever owns the users is their game to lose in a way, because you have to slowly grow users. But I mean, it's much easier when there are new net users coming to the space, so then everyone can grow. But when that's not happening, it's just a PvP and it's a zero-sum game. But the way to think about it is like Kinto is like a positive value sum for all the other DeFi and all the other chains. I mean, because we have our own chain, but from the beginning we had this North Star that we didn't want to just create another AMM on Kinto. We didn't want to create another lending and borrowing protocol, because we don't need another pool to lend ETH and borrow USDC, or another Uniswap pool to swap WETH for USDC. Chances now are, even no matter which chain you are, even if you're a new L1, you're not going to have more liquidity than Base, than Arbitrum, than Mainnet. It's a losing game. I mean, I understand why people are growing that, because it's to pump their backs, but for users, it's much better for users to just offer them the best liquidity wherever they are. So that's why we built this chain abstraction layer from the beginning with Socket. So now if you have assets on the Kinto wallet, and if you want to swap them, we find you in which chain is the best liquidity, in which protocol, and we let you swap. So you don't have to worry about any of that. And that's why I say that we bring users to all the other DeFi protocols, and with Hyperliquid, we have this wrapper, as you say, so we offer more people that maybe Hyperliquid was too difficult to get there by themselves, but through Kinto, we have onboarded more than 1,000 traders also that are trading Hyperliquid on Kinto. So I see it as a positive sum for both Hyperliquid and us. When there is competition, I think is when other applications that try to be like the funnel, like wallets, like could be Infinex or could be centralized exchanges. But centralized exchanges is similar. I used to work for Y Combinator also a long time ago. And you see a lot of companies going, 100 companies, 200 companies being funded every year. And you see that the most common question was, okay, what if Google builds this? What if Amazon build this? What if, of course, they are the incumbents, they have but the reality is most of these companies, they are focusing on totally different metrics. They just want to optimize their markets. They want to increase their revenue per customer, but they are not going to innovate. They have to be really, really hard pressed. And there are really, really few companies that really are able to kind of be reborn, like Microsoft has done that a little bit in the last decade, but otherwise it's really hard. So I don't think centralized exchanges are going to be poised to capture and be on the tip of the innovation spear and be able to adapt quickly to all the innovations. Like, for example, one of the features that we want to add this year is be able to add sports betting through Polymarket and other prediction markets. And this is not something that I think centralized exchanges are going to add anytime soon.
Right. What is the biggest UX issue that you guys still face? Biggest obstacle that users, from like maybe a tech perspective that users who interact with Kinto might still come across?
Yeah, really good question. We have done so much work to kind of remove all the headaches. Now in Kinto, you don't need ETH to do anything. You don't need to bridge ETH to be able to use Kinto. You can use always signatures with a fingerprint. And we are able to batch transactions. So with one signature, you can send a bunch of them. So it's all much better at 10x compared to what it was before. But still, right now, the main problem is composability with other chains. For example, if you are on Kinto, but you want to lend your funds on Arbitrum, let's say, on Aave, then right now, because we don't have atomic composability between rollups, I'm going to ask you for a transaction to bridge there, and then for another transaction, once the transaction has completed, to actually do the lending on Aave. Mm-hmm. And that's a bit painful for the users, because some users, the attention span and stuff, you see 10 seconds and then you close the browser, but you don't realize that you needed to send a second transaction and you leave. So being able to have atomic composability will be able to eliminate all the UI UX issues, and it will feel like a traditional mobile application or web application. But until we have really atomic composability between rollups and between chains, L1s, L2s, is still going to be a bit painful.
Still, though, I mean, that talks about how far we've come, right? Because, like, if that's the biggest feature that you guys are kind of like trying to improve from a user perspective, you know, we've come massively just from a few years ago, just from like your previous DeFi product that you built out. There were those frictions and many more just building on one chain, you know, with the wallet infrastructure that existed. So that's kind of pretty powerful.
Yeah, I agree. I mean, there are also many other things, like, for example, Fiat on-ramps being able to offer users more ways to switch from their Fiat into crypto really quickly. Right now, we have a few on-ramps, but they're usually expensive. Depending on the country, they don't have enough coverage, and then it may take a few minutes. Some of them require KYC, others require not KYC. So the experience is not uniform as a whole, but you can see how the best experience is getting there. You know, if you get the best case for every possible action, we are almost there. I think we need something on the composability side and bridging, but it's really exciting compared with a few years ago, as you say, like how difficult it was. And now in Kinto, you don't need to use MetaMask. You don't need to use any of that. All of that is hidden, because I don't think it's sustainable that people need to install these extensions and being able to worry about seed phrases and all that crap. So it's really encouraging, but still a lot of work is left.
Right. Is that kind of like, you know, you mentioned the on-ramps. Is that a weakness of Kinto, the fact that you guys, as a self-labeled kind of modular exchange, rely on whatever the best thing is out there, right? Where other people build their own solutions internally and create the ones that they think will work for their users. You guys are kind of forced to use the best solution that's out there. How do you think about that problem?
Yeah, it's also an issue of picking our battles, because we could also try to build our own Fiat on-ramp, but until we have a lot more volume, a lot more users, it doesn't make sense. But some of centralized exchanges, they have their own on-ramp, or they have created a relationship with a specific on-ramp, and they have much cheaper or even free on-ramp. That, for example, Coinbase with USDC, and whenever you transfer Fiat, you can get USDC for free. That's like a nice advantage, nice mode that they have, that is
right.
It's difficult for someone like Kinto mimic, because they have so much scale, so much revenue, and it's like we need to grow first to be able to get to similar scale. So it's like at every single moment picking the right strategy. But yeah, there are obviously a lot of hurdles, and these exchanges, they are like 15 years old, some of them 10, 15 years old. They are all massive. Exchanges have been the most lucrative business model in crypto. So they are really well funded, and those kind of issues that can be solved with money, they are obviously gonna solve those pain points for the users. Mm-hmm. So we need to offer a 10x for users in other aspects to be able to compete with them.
When I use an exchange, it's mostly just to onboard and offboard anyways. And then the specific Fiat off ramps and on ramps are too expensive. They're so expensive that I don't really want to use them anyways. How much of an exchange function is just that on-ramp, off-ramp functionality?
Depends on the kind of user. For example, for many crypto degens, or for me that we've been in crypto for many years, we usually only use exchanges for that feature. And then we jump onto the real crypto wall that is like, okay, let's leave the gate, the wall garden. And that has been part of the dream of Kinto. Is like, okay, from the get-go, it's always under your control, and you can access everything in DeFi directly, and we make it really easy for you, but you're always in control of your funds, and it's almost impossible for you to get hacked on Kinto. So because, to provide a bit more color, my previous project was an asset management protocol where users could basically pull money together and invest it in DeFi, like on stake tokens on Curve, then on Convex, or buy a stake key, put it in an Aave, borrow it, loop it, things like this. And it was going pretty well in the previous cycle. This was 2020, 2021. We got like 50 million in TVL, but we integrated one DeFi protocol called Rari at the time that was like a lending protocol similar to Morpho, I guess. They had $1 billion in assets, but they got hacked. And because they got hacked, we integrated the users that created the strategies that use Rari, they lost money. it's a long story, but they also said that they were going to refund the money. So we told that to our users, then they changed their mind through a governance proposal. So there's like, and they basically created a bank run on our, eventually I was able to recover the money for my users. But at that moment, it when it became really clear to me that users are not going to care about any of the benefits of the crypto tech, like being 24/7, no intermediaries, yet you can own your assets. If you're going to get racked, you're going to get hacked. Nobody gives a damn about everything else when you're losing your network. That's why, from the beginning, try to create Kinto to make it as safe as possible for every single user.
We've seen the rise of like crypto products that aren't completely open ecosystems and actually use the fact that they can kind of like make decisions for their users. So an example of this is Pump Fund, right? Pump Fund doesn't let you choose at what market cap your token is going to bond, doesn't let you choose your bonding curve. It doesn't let you integrate utility into your token, right? It makes like very specific decisions on what opinions your user can express. And centralized exchanges do this as well, right? They list a limited amount of assets. They provide a limited amount of pairs to support. Like they have a limited amount of margin offerings, for example, and they actually monetize this in a lot of way. I think you guys want to be the opposite of that, and you want to be completely open, where any asset can be bought on Kinto, for example. But exchanges have had a completely successful model taking the more opinionated route. Do you guys ever think that the completely open route is a disadvantage?
Actually, in that sense, we are more like a centralized exchange. We plan to offer, access to all the top DeFi protocols, but we heavily curate the experience. For example, right now we offer 100 assets, and we have curated those 100 assets pretty much manual. And even we offer Hyperliquid, but we don't offer all Hyperliquid pairs. We offer most of them, and we've curated some of them also to protect our users, because there is a lot of cognitive overload in crypto, too many options. The same with lending and borrowing. We integrate with Aave on Arbitrum, mainnet, and Base, and the user can pick, but we automatically sort the best rates. So the user, if they want to lend USDC, they automatically see which chain has the best rate, and they can automatically. We have tried to simplify the user experience as much as possible, like a centralized exchange. And we're going to go one step further, because we're going to create a mobile application that we're going to release this summer. And we expect that to be like similar to Robinhood, that kind of snappy experience that you don't need to worry about anything crypto. Because the future, I think it's really clear that a few years from now, no user is going to know which chain the application runs under, or this goes to mainnet, then to Base, then swaps this, swaps that. The user doesn't care. The user just wants to make money. The user wants to have an investment portfolio. The user wants to create wealth and compound wealth. And how that happens under the hood is irrelevant. So that's what we are building towards.
So you think maybe in a couple of years it won't be like, I pick this DeFi pool. It'll just be like, I'm getting the best rate on my USDC or something.
Yeah, exactly. Or I want to buy this asset, but I don't care which hub I need to go through to get me this asset. I just care, okay, what's my fee? How much I'm gonna get back, and that's it. And for perpetuals, it's like, you don't care also if under the hood you're using Hyperliquid or you're using the YDX. It's like, you care, it's like, okay, what's my funding rate? What's the leverage that I can obtain? And yeah.
Right. You brought up your previous DeFi protocol that you built out. What were your biggest things that you learned from building that?
Yeah, it was a really painful experience, honestly, because this happened also at the same time, like Terra was exploding, the 3 Arrows Capital, then STF depeg, yeah, and then a bit later the FTX could happen. But learnings were many. I mean, first, asset management protocols are a really difficult niche within crypto, and it's still not working. The reason is because most of the people that are in crypto right now, they are looking for a lottery ticket, they are looking for speculation, they are looking for a 10x. So they are not looking to make 10%, 15%, 20% a year. like you would invest on Betterment if you have your fintech application. So that's why asset management, and you can still see protocols like Enzyme, that was a competitor and has been there for 10 years, they are still not able to get meaningful TVL, and it's because we still have not onboarded those kind of users to crypto. So that was one of the learnings. Another learning is like building in crypto is really, really painful in many different ways. One of them is the amount of noise that there is, and especially when the market is up, there's a lot of speculation. There are a lot of shiny objects. You see also a lot of people that are chasing quick money. They are not looking to build. As a builder, it's really tough. If you're a legit builder in the space, it's really tough to see, projects that are releasing a token without having built anything, and they release FDP in the billions, and it's all hype, but they have not a single product. And it's much easier because you don't need to support a product, you don't need to support live customers, you don't have revenue, but so you can sell the dream because it's not tethered to any reality. But the moment you have users, the moment you have revenue, the moment you have actual usage, things ground to reality. But you're trying to build something real. And in the startup world, it usually takes 7 to 10 years to build something valuable that creates value for users. And then for the founders to be able to, if they help the world, if they create value for people, to be able to have an exit. But here it's like everything is flipped. So I think many people have extracted a lot of value. And of course, the extreme example is the casino with Solana, that is a bit different. But a lot of people have been chasing the lottery tickets. Because most of the altcoins are also like memes with extra steps. So retail just made the decision. It's like, okay, why should I invest in an altcoin when most of them are also still memes, because there is no real product anyway. They just fake that there is a real product. So for that reason, I will just go to the memes directly that even offer more upside. Of course, they have a lot of shenanigans in Bitcoin, so 90% of the people lose money. But it has been like a really, really difficult cycle in general. That's why you see also many OGs in DeFi that are a bit jaded. I'm still super hopeful about crypto. I've been here building for 7 years, and I'm gonna keep building. But it's in some periods hard, not gonna lie.
Why are you still here?
Yeah, I think crypto can really, really level the playing field in terms of removing a lot of what is known of the Cantillon effect. Basically people who are close to where the money is created or where the yield is created of a specific asset are able to make a lot of money. And there were a lot of intermediaries that just capture a lot of that value without adding anything. And the good thing of technology in the last 30, 40 years, because of Y Combinator, startups, we have disrupted a lot of industries, most of them, including media. That was the hardest one to disrupt. And they fought a lot. But of course, finance and healthcare are the most difficult to disrupt for many different reasons. And the finance industry is the biggest, most valuable industry. But you also see a tendency in the last decade or so of governments to get more authoritarian, and being able to own your IP online, really own it, I think is what brings me here in the end. Being able to have your digital gold in the form of Bitcoin, being able to have your assets, your investment, and all being in a way that nobody can take them away from you. In the end, is really powerful. And I spent a lot of time also in Argentina because I also work at Open Zeppelin like 7-8 years ago, and you can see really clearly how at that moment that Argentina had 100% inflation or more, even, it was like 30-40 per month. You can see how everyone, as soon as they get their paycheck, they just convert it to stable coins to try to preserve their purchasing power. And that's happening everywhere in the world. I think like everyone thinks it's like, oh, Bitcoin is going to replace the dollar. I mean, that may happen, but that will take a long time, and probably it will never happen. But what is much more likely to happen is like a lot of the 50 to the 100 biggest currency are going to have a much harder time subsisting. They are all probably going to collapse either against the dollar or against Bitcoin, and you can see that happening, and that's going to keep happening. And those governments, as they try to close the exits, it is this more and more apparent for citizens, like they need to preserve their purchasing power whenever their government tries to debase the currency.
Right. It's almost like People talk about Bitcoin as like chaos insurance, right? Like a increasingly chaotic world, um, you know, can they can help insulate themselves from that. I think you almost have a thesis here that looks like chaos insurance, but for the financial rails themselves, where it's like these like you might not be able to trade your assets, you might not be able to move your money around. We provide the security that you'll be able to do these things in an open and free way.
Yeah, there is this thing also I recommend people. The the most troublesome aspect in finance is like the cycles are really long and the big cycle usually lasts 100 years. But you can see how in periods of war or after the war, there is a lot of financial repression usually. And that means even people forget, but here in the US, they even ban gold because they didn't want people to be able to preserve their purchasing power while they were printing a lot of money. And all the economies are in a lot of debt. Japan, Europe, US, although US is in the best position from all the advanced, and still they may have a way out because they have more growth. But this is going to happen. The economies are getting old, and they are going to be able to print, and being able to have this smoke detector like Bitcoin that is like, okay, it's going to be able to preserve my purchasing power and even more if the governments debase the currency. And it doesn't need to be chaotic, even if just the governments print 5, 6, 7, 8% every year. I mean, it's kind of silent, but you just feel like you are getting nowhere after 5 years, 10 years, 15 years, and most people don't even know why.
You previously launched a token with your previous project Babylon. You guys are coming up on a token launch right now. What learnings did you have from that previous token launch, and how are you structuring the token launch today?
Yeah, the most important part for me is to make sure the incentives are aligned. And as I said before, for the founders and for me, for the team, it's really important that we have a really long time horizon, because the only thing I can do is build, and hopefully if in the long term we build something that users want, we will be able to make, in this case, Kinto really successful. In the short term, markets are driven by speculation, by hype, by other things, and you cannot control it. And try to control it is one, illegal, cornering the market, but also it's kind of like a losing endeavor. So the most important part that we have structured here is like, first, making sure retail is the one that can sell first, then the investors can sell later, and then the team after investors. So that ensures that only if enough value is created, the team will get anything out of it. The second one is making sure that even when we list, the FDB is still low enough. There is this famous post by Kobe that is like basically analyzing all the ICOs and all the pre-sales. And the most important factor of whether a community makes money and then that community is successful is whether that community launched at around 100 million or less, and then the product was successful. You see many launches recently, like some of the most famous one, launching already at several billions. It's like, that's already assuming that the network has worked and has already massively successful. There is no reason to buy it at that point. So for us, the goal was to launch at a low FTV enough that if we grow, and in this case, our FDB is going to be around 150 million. So it's like, okay, can you ideate a case where Kinto can get to 300 million, 400 million, 500 million? And that's up to every investor and every user to decide. But it's like, it's one order of magnitude lower than many of other launches. So it's much easier to become an unicorn than to become a DeFi unicorn. You can see the number of companies that have, and you want your users and your community to at least be able to have a 10x if things go well. Because if there is not even the possibility to have a 10x, when you have a 4 billion or a 3 billion valuation, it's like, okay, you're going to become like one of the top 50 companies in the world or networks. It's like, that's much harder to do that becoming 400 million company or network, 500 million network.
Mm-hmm. Interesting. When you talked about your mobile app coming out, you compared it to Robinhood. How much do you guys want to disrupt traditional finance, and how much do you guys want to stay kind of crypto native?
Yeah, the thing is like, I see it all is intermingling. So in a few years, it will just be finance. And it's like most of it actually, I think, will happen under tokenized rails, especially the newer assets. So everything is going to mix together. One of the other cool things in Kinto, because we have KYC AML, is like we are able to offer tokenized stocks. So right now, people that are known from the US on Kinto can buy Tesla, can buy Microsoft, can buy Meta. So they can already do that. So in that sense, we already have some features that, for example, Robinhood offers, and we plan to offer even more features in that future. But what matters is in the end is like, okay, make it the experience really easy, really smooth, similar to Moonshot, but for everything in DeFi. It's like, okay, connect your credit card or with Apple Pay, just put $10 into your account, and then you can use DeFi or you can buy this token, etc. You can send it to your friends and pay your friends for really cheap. So that's basically it.
Well, it's cool that you guys have a platform. I live in Mexico. Sometimes I have Mexican friends who will say, hey, Jack, I want to invest in crypto. Often they'll say, hey, I want to invest in crypto, and I'm also thinking about investing in stocks. And like, I have to suggest 2 different platforms for both of those things. In the US, Robinhood, to be fair, to their credit, has done a good job with being a universal platform. But they might be one of the only ones out there. But it's cool that with Kinto, I'll be able to say, oh, you can use this decentralized platform, and you can buy US equities, you can buy stable coins, you can buy cryptocurrencies. So that's kind of an impressive feat that you guys have accomplished.
Yeah, and then the value is going to be in compose all these assets together. For example, even in Kinto right now, if you have ETH, you can lend the ETH, then you can borrow USDC and use the USDC you borrow to buy Tesla stock, or use the borrowings to trade on Hyperliquid, to trade some memes, can that create a barbell. So the composability of all these assets is going to be really important. Now we also have more and more yield options that are coming on chain through things like the BlackRock fund that they created on Ethereum. So you are able to get bonds. We have also access to bonds, so you can get the 4.5% on Kinto as well.
That's cool. Yeah, that puts you in a competitive space with things like ENA or other yield assets. Like, you guys are in multiple competitive arenas. Very cool. How do you define success personally for you at Kinto?
I mean, as a personal metric, I try to, and in general in life, I try to always separate the decision making from the outcome, because I believe in a given situation, you can make the best decision and still suffer a bad outcome, because the world is really complex. It's a really complex system. I mean, the easiest example of this, you can see it in poker. I mean, you can get two pairs of aces, and you can say, okay, the right decision here is to bet all or to go all in. And then you can still, of course, depends on other factors like how much the players, the chips, everything. But let's say the optimal, but you can do that and still lose. And it's the same. And you can even make bad decisions and have a good outcome. That happens a lot. But it's I'm so smart. It's like, no. That wasn't the right decision, even if it worked.
Right.
So that's why, for me personally, I try to detach myself from the outcome. I'm focused on the craft. Okay, I just want to try to build the best product I have ever built, try to improve it 1% every day, listen to the users. We have already replied to more than 11,000 customer support tickets on our Discord. So we try, because that's something that exchanges are famously infamous for.
Right.
And then we try to offer a much better support for our users. So that's what we can do. And then, of course, it's a really ultra competitive environment in crypto, because everything moves really fast. There's a lot of incentives. So success is never guaranteed. But that's why focusing on the craft and being able to have that North Star of where you want to go, being able to every day showing up is what can take you there.
Mm-hmm. So that North Star, what is your greatest ambition with Kinto? This is kind of the other side of that question.
Yeah, for Kinto, I mean, the North Star is pretty clear that, and it's similar to what Larry Fink has been saying with the tokenization. I think every asset is going to be tokenized. You have bonds, commodities, FX, real estate, and then we have all these new native digital assets like Bitcoin, ETH, Stake Solana, being able to create portfolios, manage all your network in one place, and being able to, create these structured products where you can deposit Stake ETH, borrow from it, then invest in some commodities, and being able to create barbelled in your portfolio, being able to add margin, being able to compose basically a target date fund, the equivalent of 401ks using crypto. I think 20 years from now, something like Vanguard that has almost like, I forgot how many trillions, but they have many trillions, all the 401ks of the US. That kind of platform, if you imagine it in a decade from now, 2 decades from now, should run on crypto rails.
What do you think your biggest advantage is as a product, protocol, team?
Biggest advantage is like we are new. We have a really good tech stack, really good modern stack, and our surface area is really small, but we are able to serve a lot of users with a really small team. We're a 5-people team, and we have 100,000 users. So if we are able to keep growing with this team, we can support a lot of users with relatively small cost. The main challenge for us is being able to grow and being able to grow quick enough that we can achieve like economies of scale before we run out of money. That's basically the game.
You mentioned previously that Coinbase has like thousands of employees, so does Binance. Do you think Kinto will ever require that, or will you guys kind of follow the more kind of like crypto protocol lean model?
Yeah, I think because of because everything runs off smart contracts, and because we don't need the licenses, and because now with AI you can remove a lot of people, and also probably Coinbase, if they started now, they could require less people. But because of everything, similar to WhatsApp, and this was like 15 years ago, they were able to get to $1 billion company and have so many users, and they were 13 when they got bought by Facebook. 13 people. I think that model of having a two-pizza team, that people that are really, really good, and you are able to reduce the lines of communication so you can get more done, less meetings, is the right model, especially right now when you have infinite workforce through AI and really, really good tech with smart contracts that is able to basically consolidate huge back offices in a few lines of code.
You previously mentioned kind of two users, a more retail-focused user, which maybe is using a platform like Coinbase. You also mentioned institutions. If one of those people, or if both of those people were listening to this podcast today, and you were to say something to pique their interest about Kinto, what would you say?
Yeah, for retail, basically the pitch is that if you don't want to get hacked again, you want to be able to always have control of your funds. You are tired of Coinbase blocking your withdrawals, deciding whether you can use your funds or not. Just come to Kinto. We have KYC features, yes, but you are always in control of your funds. Whenever you want to withdraw, you can withdraw. Whenever you want to deposit, you want to deposit. And we promise you that it will be safe. We also have wallet insurance, even by default, up to $1,000, and then the users can buy more insurance. And for institutions, it's basically you couldn't do anything in DeFi until now because no current solution meets your counterparty requirements. But using Kinto, we are able to give you access to all the DeFi primitives that may be interesting to you, like lending, borrowing, perpetuals, but still being able to meet the counterparty requirements.
Ramon, it's been absolutely fantastic chatting with you. I think second time or third time, fourth time founders are always interesting and have really good insights about product and about building. I think that people who are coming from the Web 2 world always have interesting perspectives. I think people from the international audience and from Latin America, the Spanish-speaking world, always have super interesting insights on the space generally. So I think there's a lot of reasons to be interested in you as a founder and to follow this journey. Personally, thanks so much for being here. We really appreciate your time.
This was great. I really enjoyed it. Thank you.